Hey gang, it's Scott Curcio, and today we're recapping our 2022 housing market in Chicago. Where did we go? What have we seen? I'm here to tell you all of it, but before we start, I want to remind you that this is just a quick, broad stroke, couple-minute video. I have a lot more detail in my annual report. Yes, that's a written piece. If you'd like a copy of that, we can mail it to you. We can email it to you. That's got the graphs, the charts, a lot more oration, if you will, and summary pages on where we are and where we're going. So at the end of this, you'll see a screen which will have all my contact information. Shoot me an email, shoot me a text, message me on any of my social media platforms, and I'll be happy to get you a copy of that report. But now, let's dive in. I'm excited, can you tell? So first of all, what did we see last year? Kind of a tale of two markets, right? We had the first 4 or 5 months of the year that were crazy, a lot of multiple offers, people losing their mind, house values just boop, boop, going crazy. Then we hit Memorial Day, right? Those interest rates started to tick up, which we anticipated would happen, but it happened a lot, and the summer slowed down. Summer's normally slow. This one felt a little bit more slow because we had been at hyperspeed in the first half of the year. So where did we end the year? Frankly, November and December pulled it out. There were some really good number of contracts in those months. We saw it as a team, and I think people really got settled in where we are with the interest rates. Starting off the new year, they're realizing that from an interest rate perspective, it's still cheaper on a rate than it has been most of the years dating back to the early 1970s, right? By a point and a half. So are we in a horrible place? No, we just got really used to having money be really, really, really cheap, and money ain't cheap anymore. So there you go. It's still cheap-ish, but it's not cheap like it was. So as I look at my notes here, we're heading towards more of a balanced market. That said, still have a little bit of an inventory crisis. As if you've been watching me for a while, you know a balanced market usually means we have a 5 to 6 month supply of inventory. For our condos and townhomes and our single family homes in the city, we ended 2022 between 2.5 and 3 months supply. That is still a seller's market, friends. Our multifamilies are 2 to 4 units, a little over 4 months. So they're a little bit closer to that balance point. So for us to really achieve more of that balance where it's not super crazy and not everybody's losing their mind, we need more sellers to be selling their homes. And we've already got the buyers there, they just don't have enough homes to buy. So that'll be something we'll be watching really closely as we move through 2023. That said, let's take a look back and see what the numbers said. Right now, in general, we didn't see a lot of big swings in our sales growth, right? We gained a couple $1,000s on the average sales price for our condos and townhomes, and the same with our single family homes. Our multifamilies actually slid back a couple $1,000s. We're talking like 1% or less, so no major changes. Keep in mind, every year, I usually report how we did versus the year before. 2021, though, was our unicorn year. There were so many records set. So when I give you some of these notes, remember that we're also going to talk about 2020 because in fact, we're a lot more aligned with where we were 2019, 2020, and that's good. 2021 was this boop, boop, this little blip in the market, right? Our number of sales was down 11% from last year for our single families, right? But we were on par with what we did in 2019. For condos, our units were down 16% from last year, but still higher than we did in 2019. We're actually 17% higher than 2020. So again, not bad, just the reports are going to say that we fell hard. We didn't really fall hard. We just came back to earth a little bit, right? But what was interesting about our single families and our condos and townhomes, the market times were about a week and a half faster. So homes were selling faster in those categories. They were selling about a week or so slower in the 2 to 4 unit multifamily category. And our units there were down just about 12% from last year, but better than 2020. So those are a little of the basic recaps of the numbers. Again, I'm going to be watching all of this as we head into 2023. We'll next deliver our first quarter housing report in early April to see how we did. If you haven't watched my 2023 predictions video yet, hop over to my YouTube or my Instagram and take a look at that. It's a long one, but it's got a lot of detail and color as to where we're going. And then you can come back and see, what did Scott think and how are we doing? Was he right? Was he wrong? Or is there no answer yet? We'll be monitoring that and updating that throughout the year. I hope you stay tuned and come back. Always remember to like, comment, and share. And we'll see you soon and look forward to bringing you more data and housing market perspective in 2023.